Hello once again. Welcome on my YouTube channel and welcome on this new video. Yes, this is regarding again a new tutorial that I'm pretty sure you can use it in your trading. Yes, for now, I will not explain about the trading itself. Okay, my topic for this moment is what a trader should avoid. Yes, even you are beginner, even you're in the average level or even the pro level. Yes, because in trading, discipline is very important. Even you fulfill what is being mentioned on my previous video about the rules, about the first is the trend, second is the support and resistance, the third is candlestick pattern, and the fourth one is rejection. But even if you fulfill this one, but if you are having some kind of things that I should discuss now, then you cannot be successful if you always doing some practice that should not be included in our life as a trader. So I have geared or I have pinned 8 important characteristics or what we call this manners to practice in trading so that you can maintain and you can be profitable consistently. So what is the first thing that you traders should avoid? Okay, some traders during weekend they are still trading in the market because they see that the candle are still moving and what do you call this? These candles are making action. But the reality is that weekend trading is not live trading. Weekend trading is like you are playing with a computer. It's like it's like playing a game that your enemy is a computer. Okay? In market, which is in the weekend, the world market is closed. So what drives the candlestick? The drives the candlestick by means of algorithm. Okay? So if this is controlled by algorithm, as we all know, okay, the computer knows what we are doing. So the computer can manipulate those actions that you expect to happen. So they can what we call this manipulate the movement. For example, let's say right here, yeah. So this is the some kind of example that I experienced during weekend trading, which is what we call the OTC market. So when you put a sell here or lower, yes, then in a few seconds, you know that you are winning. But on a few seconds during a weekend trading, you are losing. Yes, I think I have a video regarding this one, the dangers of trading in weekend. Yes, because the probability or the tendency of this one when you do this one, your capital will be blown or you cannot maintain your capital. Yes, because the favor of the market is not the favor of the world or the real traders. The favor is only on the algorithmic or computer side. For the beginners, I can simply say, never trade during weekend. Yes, what you can do for all traders during weekend, you have to first record all your trades during your weekdays. Yes, after you record your trades, even these are losses or winnings, you have to record. This is what we call journal. When you have the journal, on the weekend, you have to study why I failed this one, why I win this one, and how can I improve this one. Okay? Because losing, losing is not the end, guys. Okay? As I always say, losing is the beginning of your journey. So when you lose something, then you can find some way to rectify and not do this again. Okay, so that's the first one. Avoid weekend trading. The second one is what we call is you have to avoid market news. Okay, you have to avoid market news. So here in the IQ option, I think there is a market side here that you can use also. What we call is the forex calendar. These are what we call is the fundamental analysis. Okay, in other website there is what we call investing.com. You can check where there is economical impact. Okay, but I suggest, okay, how to avoid this one. You have to plan. Okay, normally what I do during morning time, I assess the market. I plot the support and resistance level. I check the market so that I can plan ahead what is the best time for me to trade without affecting the economical news. Okay? So when, for example, in investing.com, I will show you on my next video how to uh, plan with your trades. Uh, for the news, you have to avoid at least 1 hour. Okay? That's the proper way. 1 hour before and after. Okay? But normally some traders, they do 30 minutes. That's not a problem. Okay? But sometimes if there is a what we call a high importance of the news, then we have to make longer time of waiting. Yes, so to make the volatility of the market in normal situation. So it's very important for you to understand the fundamental news, yes, because we are not only trading by means of indicators or what we call is technical or price action. We have also to consider what we call is the fundamental or the market impact, because this has a great effect of the price of the what we call is asset. You have to remember that, yes. So the next one is having no money and risk management. Okay, some guys, they don't know how to exit. Yes, so when they, for example, they win 4 5 in consecutive row, they don't know how to stop. They don't know where and when. Okay, having money management or risk management is your ability to control your winnings, control your losses, and control especially your emotions. Okay, there is no rule for the what we call is how much you can earn in trading or how much you can lose. But based on my advice, you have to make at least not more than 1% of your capital. Okay, so that when you have losing trade, you still have enough capital uh, to be retained in your account. Yes. So what is risk and money management? Yeah. So, for example, in the day that you are trading, never trade more than what we call is 3. Yes, so that's my rule in my trading. When I trade, I don't trade more than 3 wins, and I don't trade when I have 2 consecutive losses. So make sure that your winning is more than your expected winning is more than your expected loss. Okay, so you have to remember about this one. Also, when you are trading, okay, do not exceed your bet level. For example, this is 53.81. As I said, 1%. So 1% is 0.5, but it's not possible. So I put 1 because the minimum bet for IQ option is 1. So you always monitor that one. You always care for these things. Okay, you care for your capital, you care for your bet size, you care for your winnings, you care for your losses, because not every day market is good. Yes. The next one is unrealistic expectation. Sometimes, especially for beginners, they are expecting that, oh, if I have $100, then after 1 week, this will become 1,000. This will become 2,000. I know it's possible, but as you can expect more, you are risking more. Okay, so in trading, It's okay for you to increase slowly but consistently. Yes, rather than you increased uh, one at a time, for example, 100% in a day, then after a day, then you will lose all your money. So it's very important for you to control your expectation about the market, what financial instruments can give to you. It can give you consistent profit, but at the same time, it will not give you consistency. Yes, because it depends on how the market behaves. Yes. In connection with this unrealistic, which is this is my fifth rule: do not trade too much. Yes, or what we call is do not be greedy. For example, this 53.81 today having some what we call this $5 profit. This is good enough. Okay, this is good enough. Actually, 1% per day, 1% per day times 20 days, let's say 19 days of your trading. Yes, 1% per day is 19% of your capital. Imagine that you are doing that as a trader and bank only gives you 0.03 per annum. So, if you, this is good enough. Every trader is happy for this one, 19% per month. Yes, as their capital growth. But if you expect that this 53.81 becomes $1,000, okay? Then you expect again, because you have $1,000 here, you expect that it will double and double. Okay? This is what we call now is being greedy. Okay? Too much love, what we call is too much love. Okay? For this kind of money. Okay? Money is important, but as stated, love of money. Okay? Love of money. So we can be contented and we can be what we call this enough to stop whenever we have some profit. Okay, so the next one is trading with emotions. Okay, the main problem for the traders are they are trading with emotions, especially when they are losing the trades. When they are losing the trades, so what they do is they have to revenge the market. They have to cope up with the losses. For example, you have two consecutive losses, then you like to cope up with this one, and after that, you increasing your bet, then that's all. You don't see that your capital is decreasing. Okay, so you have to discipline yourself, guys. Do not trade with emotions. You have to take risks. You have to what we call is study the market. For you have also to consider your stress. If don't trade if you're stressed or you're thinking something because as a trader, you have also to focus on what we call is a price action. Okay? So do not stress yourself. It's okay for you to have consistent profit, but what we call this, we have to make life. Yes, we have to make life and do not be stressed ourselves. This is the reason why we have the trading so that we can have enough time. We don't put every time here. That's why we have this Saturday and Sunday for study and for other stuff that is important in our personal life. Okay, so the next one is avoid gambling rather than trading. Okay, so if you are blindly in trading, you don't know what to put on bet. You don't know your capital size. You don't know what's going on with this support and resistance, this moving averages, candlestick pattern. You are totally blind. Then you are just clicking, clicking, clicking. It will go up. It will go down. You are just what you call this, finding some strategy, testing with your live account. You don't know what's the how you study with this one, why this happened, etc. This is what we call this. This is very important. Yes. So do not gamble. Do not gamble in trading because trading we can predict the market. We can what we call is assess the market, how it behaves. But in gambling, it's always by the luck. It's always by the luck. So maybe you can win, maybe you could lose. But in trading, you can assure if you study more, if you spend time to analyze the market, then you're not gambling. You know what you are doing and how to control it. Okay, and the last one is trading without system, trading without strategy. So as I always make on my video, it is more about strategy. It is more about how you handle your trades. Because some of the professional traders, yes, they are price action trader. They know how this goes, the candle, what will be the next. But me as a trader, I advise you, do not focus on all price action. You have to extract one strategy or one part of the price action, then master it. When you master it, it's happening over and over again in the market. Then you can extract money from the market because you will have some more headaches if you always assess every candlestick. I know they can do that, but if you want to make your life easier, then you have to find a new or extract one strategy from price action. Then you study it. You study it, how it goes, what is the weakness, what is the criteria, what is the rule of this strategy. Then when you practice it for many times, you will see how your approach to the market. Yes. Okay, so I think you get something from this video. I hope that this would change your approach when it comes to trading. Once again, discipline is very important in trading because when we have this one, we can keep what we have. This is the true wealth. This is the true uh, meaning of wealth. The money that we can keep and how long we can survive in any kind of market conditions. So thank you very much. Keep liking and subscribing my video. Thank you very much.